All right, let me know if you can hear me in the chat. What a great week. Yes, it has been one of the best weeks of 2025. And with that being said, today is going to be the most difficult day of the week for a few reasons. So today is options expiry day, and today is the Friday heading into the weekend of following what happened last Friday, right? So we have to be very questionable if market participants want to do anything heading into the weekend, right? Are we going to see extreme volatility today? Yes or no? And overnight price action can definitely foreshadow what could happen, which is another aspect of why today can be extremely difficult based on if there's going to be continued headlines today or not, right? And obviously, we have no clue if there's going to be headlines today or not. So we have to be able to read price action in real time. We have to be able to understand the real time situation so we don't get cooked like last Friday when Trump is doing what he's doing, right? So, three reasons today why today is going to be the most difficult day of the week. Number one, options expiry day, self explanatory. Number two, obviously the range has been used up, there's no more fresh levels. And number three, headlines. Headlines can be something that price action will be reacting to if there is going to be headlines. But that being said, let's go ahead and open up the Substack, post it in the chat for you guys. The Substack houses the analysis and the pre-market and the trade plan. But just remember, we had such good days on Tuesday and Wednesday. Yesterday and today, it's all about protecting yourself. It's all about protecting those gains. So the bias for today will remain neutral. And the only reason for the bias remaining neutral off of the minus 100 point sell off is because bulls managed to print a false breakdown of Tuesday's low, and then bulls managed to recover above yesterday's low. So the chart was bearish overnight, but the recovery of Tuesday's low, and especially the recovery of yesterday's low, has flipped the chart back neutral. Volatility was very high overnight, and we got a clean flush. Let's continue onwards. So we're expecting a range day today as price action sold off overnight, and we now have a 200-point range. If we combine yesterday's RTH range plus today's overnight range, that being said, the overnight selling was caused by external context. If external context is to return today, and if the overnight low plus last Friday's low breaks down, we can enter a trend day down. So definitely keep that in the back of your mind. If there's headlines today and we flush out the overnight low, we flush out last Friday's low off of extreme excess weakness on the charts, just like last Friday, then we can definitely enter a trend day down. Today will be tricky, and as I said yesterday, earlier in the week provided easier setups. For today, we have to stay on our toes in case external context return, but for the most part, expecting price to remain neutral because of the overnight bounce and close as an inside week. It's all about last Friday's range, right? That's what we talked about in the weekend report. Last Friday's range is going to produce extreme volatility. We're getting 100-point RTH ranges and we're getting 100-point overnight ranges, right? But eventually, when we do leave last Friday's range, the bias will change, context will change, and we'll have to adapt to whatever happens in real time. So here's the structure for today. Our bias is neutral. Overnight, we dipped into Tuesday's low, 65.9325, and printed a false breakdown. Bulls have successfully defended the macro daily higher low pattern, and we are back to yesterday's low. Holding above yesterday's low will be key as buyers try to keep the bias neutral. For buyers today, it's all about sustaining price within the overnight range. Even better if they can sustain price above the prior day's low, which got recovered overnight via the false breakdown of last Tuesday's low around 5 a.m. And as I continue to read here, I don't think there's anything wrong with taking today off, guys. Tuesday and Wednesday were phenomenal. Yesterday had some decent opportunities, and today is going to be absurdly tricky just purely based on our pre-market read. So if you guys want to take the day off, I don't blame you. I'm going to be eyeing a short entry within the first hour. Yes, and definitely keep your trades limited. Don't overtrade, don't revenge trade, etc., etc. 66.11 through 66.2375 will take the spotlight today as we must see the higher low, we must see hold and So I messed up this terminology here. And hold price action at the opening / hugging yesterday's close will be healthy for buyers to continue higher into yesterday's range high balance. The failure of 66.11 through 66.2375 can result in the chart flipping bearish, in which the overnight low must print a false breakdown. So this is very important to understand, right? The prior day's low is right here. We have 66.11 through 66.23. And if we want to see buyers sustain momentum to contest the prior day's high, then we have to hold above the prior day's low, and we have to hold above this zone. Breaking down below this zone can lead to a test of the overnight low, and intraday at that point can be flipping bearish, in which we really need to stay on our toes, and we really have to apply a false breakdown. It's going to be easy to get run over if volatility increases below the prior day's low, because that could showcase a false recovery, right? Yeah, so the recent higher lows, I just go to the macro time frame. We had Tuesday's low and Wednesday's low. Breaking below Wednesday's low was a warning sign, right? And then breaking below Thursday's low was a warning sign as well. But because buyers managed to print a false breakdown of Tuesday's low overnight, and then we recovered Thursday's low, and now we're trying to recover Wednesday's low, they basically stepped on the gas, right? They stepped on the gas. If they didn't do what they did today in the pre-market, then our bias would be very bearish, right? But they stepped on the gas and they saved it. They saved the pattern on the macro time frame. Below that, last Friday's low comes into play, and this is a macro support that must hold or we liquidates hard below, right? So if last Friday's low fails, I'm expecting massive liquidation. 66.80 through 66.9275 is significant resistance, in which breaking out will be a great bullish indication, and the better resistances are at yesterday's high. In order to get towards yesterday's high, bulls would prefer to hold price above 66.5325 through 66.6175, which is the most aggressive support, 66.11 through 66.2325, which is the immediate support like we talked about. The bear focus for bears today, we are retracing yesterday's range off of recovery of Tuesday's low and a larger more macro recovery of yesterday's low, 66.32. This means that the retracements must hold as buying pressure may become exhausted into key resistances. The first one is 66.80 through 66.9275. That is the immediate resistance within yesterday's range, followed by 67.1975 through 67.2925 and 67.4150 through 67.4725, marking yesterday's high. Above here would be overly bullish because we would have retraced all of the overnight and prior day's range. Holding below 66.80 through 66.9275 will showcase strength from sellers, in which we can try to break down below 66.32, yesterday's low, in the 66.11 through 66.2375 support zone. I'm expecting liquidation below, in which the overnight low can get run over easily via volatility, and then last Friday's low will take the spotlight. So if volatility does increase, the false breakdown of the overnight low obviously will be a great setup if we get it. But if we're flushing off of a headline, this is where your real-time read is going to come into play. If we're flushing off of a headline, then the overnight low can get flushed out very easily, and we can easily contest last Friday's low, right? And the only reason why I'm talking about that external context is because that is what was happening overnight today, and obviously it's Friday, 1 week after what happened last Friday, and we're heading into the weekend, right? So just stay on your toes. All right, so how do you formulate a trade plan based on all of those notes? So first of all, as I said yesterday, the easiest setups for the week have passed, and yesterday plus today are naturally going to be trickier because nothing is extremely fresh anymore. So when I talk about anything is extremely fresh anymore, for example, the macro resistance was fresh on Wednesday, and then on Tuesday, the gap fill support at the 66.11 support was fresh as well. And obviously, these two areas produce the best trades of the week. So we don't have to continue over trading, especially when volatility is so high. Today is also OPEX day, in which can produce extreme traps. Then we also have to keep in mind the potential for headlines. That being said, the actionable setups for today will remain at the opposite ends of the balance, because as the chart remains range bound, we have to fade the edges and not get trapped in the middle. The bias is neutral as well, so expect traps with both sides being active until someone truly gets run over. So that's outside of last Friday's range. In order for sellers to be strong today, as outlined in the bear focus, 6680 through 6692.75 is a must hold, which aligns with the basic retracements of yesterday plus the overnight range. Above here showcases strength from buyers. Sellers do not want to see price back in the previous day's high. I don't mind risking my points here, especially considering that buyers have moved price in a straight line into it since 4 a.m. Logs today can be tricky, and for sure keep in the back of your mind volatility from a headline. Read price plus the watch list. I also like short in the 67.1975 through 67.2925 plus 67.4150 plus 67.4725 zone, but I will be applying the false breakouts entry model here slash Fibonacci trap. The last trade idea for today is the bull focus outlined 66.11 through 66.2375 being core support to sustain the overnight false breakdown. One can place a bid here because off of the failure, we can get trap buyers for a move into last Friday's low in which the swing idea comes into play. All right, so that's pretty much all for today's session. 6680 through 6692.75. If you're shorting here, it makes sense. The back of the zone, 6692.75. Stop loss behind the structure that we printed on Wednesday for in the evening slash overnight. That makes a lot of sense if you're shorting there. And then if you're longing today, for buyers to sustain the overnight false breakdown, then they must hold price action above the prior day's low. Below the prior day's low right here, stay on your toes, watch for volatility if it increases, and then from there you can watch for the false breakdown of the overnight low, but again, watch for volatility, and then the big trade will be at the false breakdown of last Friday's low. And then obviously, the prior day's high false breakout makes a lot of sense if you want to take a trade there as well. Keep in the back of your mind everything that we talked about as it pertains to today's session, Friday, headline, and OPEX day. Other than that, good luck. I'm going to be active with the bot in the SPY VIP.
Hey guys, um, I'm gonna hang around here for a little bit as well. So today, my friends, we have a lot of options expiring. Let me post this in the lounge real quick for you guys to see. But there is potentially one of the contracts that we sold for futures that may be assigned. So I'm gonna post it right now. So the October 17th. So 1 second here, guys. Let me get this up here. So today is going to be an interesting day because for the first time on a Friday, we actually close to assignment on one of these. So I want to kind of see how this works. I'm not scared to get assigned, guys, on at least for a part of the position. I'm not as scared to get assigned. So we will go through it and I'm going to show you guys how I plan to manage the position so that way you guys can learn from it, okay? Because it's been a crazy past 2 weeks. The funny thing is we're still inside of last week's range, which is very crazy when you think about it. All of this volatility, but we haven't even broken out, right? So there's more to come here, guys. There's a lot more to come on what's happening with this market. The VIX is very high. The VIX is above 25, right? When the VIX is that high, there's a lot of fear in the market. The market is at extreme fear right now. Okay, so it's either that the VIX is pricing in a move, right? They believe that there's a bigger move to come, or the VIX and the fear level is not an accurate reflection of what's going on in the market, and we're actually going through a period of consolidation. So it's one out of the two. But when these type of periods happen, what basically the premiums that we sell, we're going to get paid a lot more because the premium for the puts and calls are more expensive. So a lot of people have been asking me about, Rich, should I buy leaps? Should I, buy calls? Should I go zero DTE? But just remember, when the VIX is this high, right? When the VIX is this high, you're going to have to pay a premium for the contract price. So I personally am more on the side of selling options. Like this week, we on Monday we sold AMD puts, and I'm getting a lot of money for those puts, right? Because the premiums are higher. So I sold those puts. We're gonna cash those out. And then this week we also sold on the S&P 500. So let me post that right now. Okay, so I'm gonna post that. open position. So is today. All right, so let me just post this here. So game plan for today is to manage these open positions. Note we may be assigned on one of the October 17th contracts here. Let's see how we close. And then I will also be looking for a day trade today, step by step, and we'll alert here. Dropping like, let's go. Okay. All right. So you can see, guys, I don't know if you want to put this on your chart. So October 17th, the 6635, 6635 is the strike that may be assigned today. So let's pull that up on the chart and let's just see where that is. 6635. So so you could see there right now it's out of the money, right? It's out of the money right now. So maybe within the first hour here, guys, if we stay above 66.35, I'm just gonna go ahead and close this position and see whatever premium I can get, right? But there we go. So this is the first week that we've ever been through a situation like that where we're close to assignment on a Friday. So we're gonna see how that works. But that being said, we're still up over $3,000 this month selling options, right? So I'm more than happy to close this. If I have to close this particular one, we'll just go ahead and just close it. Right now, I'm down about 200 bucks on it, so it's not even that bad. But if we need to close it, we'll close it. Okay. So this week, remember, guys, for new members joining here on the S&P 500, our big trade this week was on Tuesday, where we had the gap fill. Okay, so we filled the gap. We touched the 886 Fibonacci of last week's range, and we defended it. We did not break last week's low, which is pretty crazy, guys. We came very, very close, very, very close to breaking last week's low, and we could not break it. So that's been holding up so far, and we'll see, guys. So I need to. So my game plan, I really want to cash out these $1,000 in premium. That's my game plan. So today, I'm all about managing that. If we're able to cash them out, I'm gonna look for a day trade with you guys in the room as well. Um, Also, a few announcements. Just want to post it in the chat here. Do you shift to lower deltas puts for selling? You can definitely do that, but right now with this with this strategy that I'm building, I want to see the ups and the downs. I don't want to just go ahead and bail on the position. I want to be able to show you guys the full journey and also show myself the full journey. If we get it, because the whole point with selling out the money options is basically if you get a sign, the market is going to be at a deal, right? Which it is, right? If you're bullish right now, we're still down from highs. So it is technically a deal, right? So we'll see how that goes. But first of all, let me just throw this in the chat. Hit me with a one if you're profitable on the week. Hit me with a two if you're not, and let me know where you're tuning in from today. Okay, so are you internationally? Are you here, U.S.? Where are you guys at? Okay, so this week I want to just summarize. So what's going on, Ada? What's going on, Vish, Anna? So we see Toronto, Germany, MD, Idaho, USA, Cali, what's going on? Okay, I just want to say this. This week is a little bit harder of a week, honestly. There was some ups and downs, but really and truly, if you played the ranges, it was an easy week, right? Yes, on Tuesday, we bought the dip. That one trade from the gap fill can pay for your whole week. And then I know if you guys have been following Derry, he had some short plays. Is that correct?
Yep, sold the high of the week so far. Yep.
Okay. So if you played the ranges, guys, there still was a good opportunity this week. All right. So most people I see are up on the day, up on the week, which is good. If you're struggling or whatever's going on, reach out to me. Okay. I want to help. Send me a DM. We'll figure out what's going on. But last week was pretty easy until the Friday, and then this week today going into today, I think it's been pretty fair. All right, I'm not saying it's the easiest week, but it's been pretty fair. Okay, so one thing that I want you guys to know is I committed to doing monthly seminars. The last Sunday of every month, I'll be doing a seminar, which will be reviewing all of the statistics from the month, all of the trades, all of the win rates, and we're going to be making little improvements on the system and I'm going to be doing it with you guys so that way I can teach you guys and that way we can get better. Okay, hit me with a 10 if you're interested in that. So make sure you register. Okay, it's a Zoom registration for all the monthly seminars, so make sure you register. I posted that. You should see it in the AutoFib channel because there's limited spots. Okay, I think it only goes up to 100 spots. Okay, I don't want it to be too much bigger than that anyways, because then it can become too much. So make sure if you're interested, you register. You'll have those monthly seminars. That way we can keep getting better every single week. Okay, and that way you can see the modifications of the system, the little tweaks to the Fibonacci, etc. Just hey Angela, just go to the auto Fibonacci indicator. It's right there. It's the last post right there. Okay, you should be able to see it. Actually, let me try to post it in the chat. See, I'll just try to post it in the chat right now for you guys because I want you guys to come out to those seminars so that way we can just keep getting better and keep focusing on what we need to do. Okay, one second here. Let me try to post it in the chat. Nope, that didn't work. One sec. I think I have to copy the URL. Okay. So there we go, guys. If you haven't registered for the monthly seminars, go ahead and register for it now, okay? And just click on the that is the last Sunday of every month from 1 to 2 p.m., okay? And if you register as well, I'll try to send out the recordings in case you miss it. But that's pretty much it for me, guys. So AMD on Monday, we killed it on Monday with AMD. Futures this week has been good as well. I'm in one position that's underwater. You can see the rest of the positions I shared in the lounge are up. So I'm going to try to manage this one right now. Okay. So I'm going to head over to the lounge and I'm going to be looking for a live trade alert like I did yesterday, like Derry did. We're trying to give you guys as much live trade alerts as we can that are good quality trades. Okay. That's the game plan. Try to give you good quality, good, strong setups. All right. And just remember with the 2-to-1 risk reward, right? If you risk 100 and you make 200, you only need to win 4 out of 10 trades. That's the key. Just keep that math in your head. Don't try to be perfect with everything. Eventually you're going to lose on something. Okay? But if you lose, just make sure you're managing the risk. Don't let it get out of control. Don't revenge trade. Don't do anything crazy. Really, on the day, there's probably going to be 1 or 2 really good trades. That's pretty much it. You're not going to see more than 1 or 2 good setups. So if you're trading 3, 4, 5, 6 times, you're most likely chasing a move that you missed or you're just revenge trading. So just have a limit to how many trades you're going to take and then cap it. So I'm going to head over to the lounge here and I will keep you guys posted on my positions and what we're going to take today. I appreciate you guys and make sure you sign up for the Zoom monthly seminars, okay? It's completely free. Appreciate you guys.
Yeah. And to add on to what Rich said, I completely agree. There's probably only going to be 1 or 2 A plus setups for the day. And sometimes there's not even an A plus setup for the day, but that usually only happens on a week like last week. Monday, Tuesday, Wednesday, Thursday last week. It was so choppy and it was stuck in such a defined tight range that wasn't really anything as high quality as we're getting this week. This week we've had numerous high quality trades, but that being said, I would say there's only about 2 A plus trades per day throughout all of the volatility throughout this week. So that says a lot, right? Volatility is at extreme highs. We're getting 100-point ranges, but I'm still only seeing about 1 or 2 A plus trades a day. And 2 A plus trades a day, that's insane. That is lovely. Sometimes you may only get 1 A plus trade in a week if volatility is non existent. So the fact that we're getting 1 to 2 A plus trades every day this week, that is phenomenal. And if you're an elite trader, you can honestly walk away with 30, 40 R on a week like this week, right? And Tuesday and Wednesday is a great example. You can make 10 R easily on those 2 trades, easily, and just call it a week. You even call it a month, honestly, and come back in November. But anyways, the game plan for today is very simple. For the longs today, we have a few options: 66.11 through 66.2375, including the prior day's low at 66.32. This support structure is essentially a must hold, right? If sellers manage to retrace price action into it. If we do not hold above the prior day's low, then the overnight low, and especially last Friday's low, must print false breakdowns. But keep in the back of your mind that if we're flushing below the prior day's low, are we flushing off of a headline or not? Right? So you have to keep that in the back of your mind. Today is also options expiry day, so expect continued neutral trading if there isn't going to be a headline, and a lot of traps heading into the weekend. The number one thing as we head into the weekend every single Friday is how much risk do market participants want to take, and everything is juiced heading into today's RTH session because of overnight volatility. So how much risk are market participants going to be taking? That is something we will have to ask ourselves. The FEGs are by Nephew Sam. That's Nephew Sam's indicator on TradingView. For me, you guys know my opinion on FEGs. They're nice aesthetic for the charts, but market structures will always dictate who's trapped and who's in control, and market structures are objective fact, right? And we can utilize our technical analysis to give us good idea of which market structures are better than others. And I don't think you can do that for FEGs unless you're aligning the FEGs with market structure, which is what people do anyways. FEGs are there as a little bit of extra confluence and confirmation, just like the Fibonacci trap, right? But the market structure will always come first because that's literally price action. And yeah, usually when I see people trade FEGs, that's what they're doing anyways. It's like, okay, there's a false breakdown here. And once they get that false breakdown, then they're trading the FEG when price recovers, which is a fairly good system. I do feel like that is a very good system. Because as you guys know, understanding recovery off of a false breakdown is sometimes difficult to understand. So that's why we have the Fibonacci trap. And then that's why other people use the FEGs. Like yesterday is a good example too, right? I rushed yesterday's false breakdown. So I got poked out. But that trade didn't really result in much anyways. So it's fine. It is what it is. If you guys were around at 5 a.m. today, though, if you guys were awake at 5 a.m., there was an insane false breakdown Fibonacci trap. That's using Tuesday's low market structure. Right? Tuesday's lows right here, and then buyers managed to defend the higher lows that they've been developing on the macro time frame, which is so important to the overall structure. But that being said, it can fail today too. Just because they defended it overnight doesn't mean that during RTH today it can't fail, right? So from a macro perspective, that's what we're going to keep our eyes on. And it's important as well to note that 1, 2, 3, 4, they only have 4 macro structures within last Friday's range. And if you don't want to overcomplicate trading, you don't have to literally day trade these levels, right? There's a lot of levels on day trading time frame, but I truly and firmly believe that you have to master swing trading first before you level up to day trading. So swing trading this week has been absurdly easy. We had the FOMC low 66.11 false breakdown. Just connect the dots. That's essentially Tuesday's trade to get long. And then you manage your risk into the next significant resistance on the chart, which would have been 67, 60, 75. We shorted that, manage your risk, and then we just go back and forth, right? Back and forth. Maybe there needs to be a zone in this pocket right here, but I think my zones are completely fine. Let's watch the watch list very closely. Let's see if it flips completely red. NQ and ES will tell the story. NQ, is it minus 1%? Is it minus 2%? Is it beyond minus 2%? Keep that in the back of your mind. ES, same thing. And once again, today's options expiry day. So honestly, guys, if we don't get a trade before lunchtime, so if the first hour produces just extreme chop, I might just call it a day and head into the weekend. As you guys know, the first hour of the day houses the highest probability, houses the best setups for the week and the day. So if we're going into lunchtime and I don't see any good trades or the bot didn't get activated at these zones, at least, and these zones aren't even the extreme edges, which will give you the best probability at the prior day's high and the overnight low and last Friday's low. So if we don't get any of these lines to be activated, I will probably just call it a day. And I'm going to go and work on some education for you guys. Yes, hopefully premium gets chopped today. That's usually the consensus behind options expiry day, is that we just chop it out all day long. But again, we're in such a volatile environment, and obviously headlines are looming. So we just need to stay on our toes, right? Just need to stay on our toes. Other than that, guys, the after hours team meeting on YouTube has been so good, and a lot of people have been enjoying it. So if you haven't been watching those after hours team meetings, I post it every day in the after hours report that I do on Substack. So read that after hours Substack report, and then you're gonna see the recording there as well from the YouTube after hours live stream. And then this weekend, Rich and I are gonna do a massive document on recaps, education, ideas heading into next week, and you guys can rewatch these live stream recordings as well on the weekend. So if you guys remember the blueprint report that I used to do on the weekend, now that all of that's just going to be in Substack to make it cleaner. All right, well, I guess as we're waiting for a trade here, let's talk about the best trade for the week, which in my perspective would be Wednesday's short at the highs. So Wednesday we got short here at the first hour of the day, right? So no coincidence that the best play of the week was in the first hour of the day on Wednesday. So around 10 a.m. here, we got filled short at 67.60, 75. This one was a 10 out of 10 day trade, and this one was also a 10 out of 10 swing trade. And for the SPY VIP members, we did complete live commentary in this zone for both swing trade opportunities and day trade opportunities, because this was macro resistance. When a macro resistance is in play, you can look to swing it. Vice versa, when a macro support is in play, you can look to swing it as well. Right. And we ended up tightening our stop loss here for the swing. We ended up tightening it into the prior day's high. And then luckily for us, sellers managed to hold price action below the prior day's high. And if you remember the analysis, that was something that they must do yesterday. And we ended up getting continuation. So that was good. But last Friday's low did not get contested overnight. So no limit orders got triggered overnight, unfortunately. But that's all good. Me personally, my lean is that we're going to have an inside week close, and then next week is going to be more volatile than this week. Next week can easily just be the climax of the flash crash from last Friday. So it makes sense, right? We spent an entire week digesting within Friday's range from last Friday. And then after that consolidation concludes, which would be represented via an inside week, the breakout or the breakdown of that candlestick on the weekly time frame is going to lead to the next big move. Either we get all-time high or we get a correction. So that's why market participants and their emotions are at highs right now, because you go back to the macro time frame and we can take a look at the weekly chart. Last week, outside bar. This week, inside bar. The last time we had a pattern like this was the beginning of August, and the breakout of this inside bar on the weekly time frame resulted in a 300 and something point move to the upside. So what's going to happen for this inside week candlestick? Are we going to break down, and are we going to trend into some EMAs down here? Are we going to break down into some massive, massive lows from August or even the middle part of August? Or are we going to break out the candle and are we going to print new all time highs and start to trend towards 7,000? Super key to keep an eye on the macro structures always. Doesn't matter if you're a day trader or not. The macro structures are so key and they keep us aligned with the narrative. All right, so we're approaching 6680 through 6692.75. For you guys that are interested in this zone, you have a few options. You can play the false breakout slash Fibonacci trap of this zone, or you can look to just sell it on first test. And some notes here about this zone is that we're trending into it pretty much in a straight line, 115 points. So if buyers are to be exhausted into this zone, it makes sense to look for an opportunity short. And another key note is that if sellers manage to defend this zone, that's going to give them the highest probability to contest the supports below. If we break out this zone and then we head up into the better resistances up here, it's questionable how much we can essentially retrace back into the overnight range, right? So if you're, for example, shorting the previous day's high, which is definitely a good area to short, we probably just have to manage our risk into the 6680 through 6692 zone instead of all the way down here or down here, right? And once again, guys, remember today is going to be objectively the most difficult day of the week, right? Just purely based on the information that we have at hand today. Monday, Tuesday, Wednesday, fairly simple. Yesterday, fairly simple as well. Still a little bit tricky, but today is definitely the outlier for sure. And remember, always connect the dots, always look at structure. So if we do contest 66.92.75, that would be a fairly decent spot to look for a short. And then if you are looking for another high or another daily lower high, it makes sense to hold this zone or at least the resistances above, right? Because sellers have been working now on producing lower highs on the macro time frame. So this is what buyers did earlier in the week. This is what buyers did Sunday, Monday, Tuesday, Wednesday. Well, up until Wednesday, I guess. Right? And the fact that Thursday into today, sellers might be working on exactly what buyers were doing, I think that is some great context clues. Right? At the end of the day, it's just digestion within last Friday's range, but it is bearish digestion, I would say, until we get a clean breakout above the prior day's high now. That would confirm the macro lower highs to be invalidated, and then sellers can probably just get blown out the water at that point. For my swing traders this week, it's been a one and done week. That's the best thing about swing trading. If you have a very good opportunity like how we had on Wednesday, it's one and done, right? One and done. You don't have to overcomplicate things. And I was talking about this with a member yesterday. The macro time frame produces the best levels on the chart, period, right? The macro structures will always be the best levels on the chart. And what I mean by best levels is that they house the best probability for a reaction, right? Sellers and buyers, when they see that these big, large zones and these big, large areas of structure are being contested, that can attract the most, right? So Wednesday is a phenomenal example of you don't need to overcomplicate it. Literally one and done. If you're swing trading, we ended up getting reversal from the highs into the first area of support to take a target, and then our stop loss didn't get triggered, and you're simply just holding on to this position. Now, if you want to realize your position into the weekend because of weekend risk, that's completely fine, right? But that's up to you and your risk management. I think if you scaled out at the support like we talked about yesterday, you will be completely fine with that position over the weekend.
Hey guys, I just wanted to jump back in. I don't know if you guys were able to see, but I just took a trade in the lounge. Um, so all of the October 17th premiums are now green. Got about a so we're basically respecting the previous day's range here. You want to pull up the SPY chart real quick, and we'll just take a look at it. So we're holding the bottom end of the range. So I went ahead and just took a little play here, guys. If we just go over to the 5 minute, or 1 hour is fine. 5 minute, yeah. So you see here, guys, look, you see yesterday's low. So this morning right here, first 15, 20 minutes, we're respecting this low. That's right around the 886 Fibonacci. Do you have the previous day Fibonacci indicator on your chart here? I don't know if you have the previous day. Yeah, the next one below it. Okay. And right here, guys, I want you to go back to the settings on that one. I just want to show you guys how to add this. Go to the settings and hit the 886 um 886 bear. Scroll up. I think you don't have the latest one that I sent out, but
No,
anyways,
probably
that's
not.
fine. That's fine. But anyways, so here, guys, we have you see how we're respecting the bottom end of yesterday's range. So October 17th, right now, guys, those premiums are all green. So I'm gonna make a decision in the next hour what I'm gonna do, if I'm gonna close out the positions or not. I normally hold it to the end of the day, but we'll see today. But nice little one-to-one off of that 786 area. You see how we go to the 786 and then we rally to the 618? That's a little one-to-one there. That's a little scalp, right? So let's see how this one plays out to the end of the day. If I could avoid getting assigned, I would prefer to. I would prefer not to get assigned, but we'll see, okay? But that's an example, guys, of just the Fibonacci using the common sense, right? If we're near the bottom end of the range, we're near support, right? You could even see on the 4 hour or 15-minute chart here, we're pulling in about 5 or 6 candles in a row, right? We're pulling in, and that pullback is going to lead to a Fibonacci setup there. So, anyways, I just wanted to come in and drop that in here, and let's see where we go from here. All right, appreciate you guys.
Yeah, so if I don't get a bot call out today before lunchtime, I'll probably just head out. And that reaction of 6680, that might do it right there, to be honest. I think we might have missed it. I had the bot at 6692, so it's all good. For those of us that wanted to short the zone though, like we talked about, and you caught it, definitely look to manage your risk here because we're in the next zone, right? Zone to zone risk management. So I do remember one person in the chats, I believe it's LJ, said he wanted a short today in the first hour. So hopefully you caught it right there and manage your risk. 6679, nice. Yeah, it's a good trade. And then let's see if we can go to the opposite end, which is 6611 through 6623. I took a little small bull entry as I wait for a short opportunity. Okay, yep. I think that 6680 test might just do it though. Hopefully we can get a breakdown now of the opening range low and then contest the better supports below. Hopefully Angela's trade can result in some nasty risk reward. But anyways, zone to zone risk management, right? If you shorted 6680, you have to manage your risk now in the next zone, 6653 through 6661.75. Right? Zone to zone risk management. And then once you get that first target, then you can use your real time read to figure out if you want to extend your targets or not. Because if you're just going zone to zone, the next target is going to be the FOMC low area, the prior day's low area. But if you see that in real time, price action is flushing, the watch list is red, then you can continue lower, right? You can extend your targets. That's exactly what we did on Wednesday. We extended our targets, but a little bit more different context on Wednesday because it was fresh macro resistance, high conviction area. Which time frame shall the structure be drawn? Maybe on the weekend I'll record myself drawing the levels, but essentially what I do is I flip between the 15-minute time frame, the 1 hour time frame, sometimes the 5 minute, usually not though, the 15 minute and the 1 hour. And I'm using a box by box approach, right? So I'm looking at the ranges and then I'm going into the nitty gritty of the ranges. And my number one premise for every single level that I have drawn on the chart is what is its contextual significance to who got trapped, right? Who's trapped, who's in control. That's why I call them breakdown and breakout triggers, right? So these levels mean something because somebody lost at that area before. That's why the market loves the structure, because the market is just a machine for liquidity at the end of the day. How far back is significant? It's a good question. So for intraday, intraday is a little bit finicky right now because of what happened last Friday. We do have to zoom out multiple weeks to get good structure because last Friday is a -3% move, right? So I zoomed out for my intraday levels as far back as August. So I have an August 15th level here. I have an August 22nd level, right? So I had to zoom out far just because of what happened last week. There was a lot of volatility. But traditionally, when the market is just chilling out, which is 70% of the time, your intraday levels are only going to zoom out as far back as the recent 2 to 3 weeks, right? And price action loves to play ping pong within the recent 2 to 3 weeks. So then you have those levels as your intraday structures. And anything beyond 2 to 3 weeks, multi month, becomes macro. And then the bigger picture is multi year. But the bigger picture for us is just the April low to high, because the April low to high is such a significance range, right? So that's how I differentiate it. The macro time frame is zooming all the way back to, I have my last level on the macro time frame with the August 1st low, so multi-month range. Intraday range really just comes down to last Friday's range, but if you want to see things like 6611, then you have to be zooming out as well, right? Because last Friday's range is within this structure. So maybe on the weekend I'll record myself because every weekend you have to adjust your levels, right? We got a whole week's worth of new price action and new structure and new context, so we have to adjust every weekend. Sometimes the macro time frame doesn't need to adjust, but I will be adjusting. So for example, 67.60.75 will now be 67.66.75. So you can see how that little adjustment makes a lot of sense, because the level that was reacting to this area is last Wednesday's high and then last Thursday's low. It's still the structure that's incredibly significant, but we always use the most recent, right? And I got a question, why don't I adjust the levels throughout the week? And the only true reason for that is an educational perspective, right? We want to understand why these levels got printed throughout the week here. So that's why, for example, I'm keeping the September 10th low, I'm keeping the September 25th low, the FOMC low. But of course, you guys can adjust in real time too, right? So instead of 66.23.75, you can adjust it to 66.41.75, or excuse me, 66.32, which is the prior day's low. Are those levels still valid after they have been broken? Good question. Whenever a resistance breaks, it flips into support. And whenever a support breaks, it flips into resistance, right? And then you have to really understand what that means, because a lot of the times you're going to see false breakdowns and false breakouts. So in order for a support to truly flip into resistance, it has to fail. It cannot be false, vice versa. Levels get adjusted as macro lows or highs get broken, so it depends on how fast the moves happen. Yes, exactly. A lot of the times, the intraday levels are going to be very, very, very trappy. You're going to see a lot of false breakdowns and you're going to see a lot of false breakouts because the market never ever moves in straight lines. And when you're on a smaller time frame, you're really going to see the intricacies of that, right? The macro time frame, you're getting large candlesticks, but as you zoom in, you can see the intricacies of that candlestick, and you can notice here how much of price action is really moving within that candlestick. And day traders, your job is to take advantage of that volatility, that movement, that liquidity within that candlestick on the macro time frame, right? But you still have to understand what's happening in real time. You still have to get good trade location, and you still have to apply the basic principles of just trading in general, like risk management, position sizing, etc. How do I recognize a false breakout or false breakdown while it's happening and not just in retrospect? So that's a very good question too. You're killing it with these questions. Whenever we're looking for a false breakdown or a false breakout, there's specific criteria that you have to keep in your mind. And sometimes you just have to use common sense and logic. If sellers are truly strong, then price action should not be chopping at a low. It should just flush it out. It should become resistance and we should continue lower. Yesterday is a good example. At Wednesday's low, if sellers are to break down Wednesday's low, which is key support, then we shouldn't have gotten what we gotten. And yes, it did break down overnight because of the volatility we got overnight, but this is still a good example of what a false breakdown looks like, right? Level to level, you still got a little bit of risk to reward out of this. Unfortunately, did not get much though. And then some overnight headlines came in and we flushed back down. And then we got another good example of what a false breakdown looks like. So we have to zoom out here. We have to look at Tuesday's low, which is right here. Remember what we talked about earlier, the macro time frame patterns, right? So we have the daily higher low on Tuesday. We have the daily higher low on Wednesday. If the Tuesday low breaks down, if Wednesday's low breaks down, if Thursday's low breaks down, the entire structure comes collapsing down. So you can see how buyers really stepped on the gas with the false breakdown of Tuesday's low. Sellers were unable to keep this level of resistance and it recovered. You can see the recovery very clearly on the 15-minute time frame. What does recovery look like? Well, recovery literally looks like we're holding price action at the level or even above the level, and then we get follow through. That's what the Fibonacci trap is trying to show to you, right? It's an opposing leg. It's doing the opposite of the sentiment, which would be bearish at the time. And then we print recovery of Tuesday's low. We print a retracement into Tuesday's low. But look at the candlesticks right here, 5:45 a.m., 6 a.m., 6:15 a.m., 6:30 a.m. If sellers were breaking down this level, you should not see this chop, right? And that's what created the false breakdown to where we are now. But obviously, don't lose sleep over the game. There's no need for us to be trading at 6 5 a.m. right? Just get your rest, right, and come back for RTH. I will say yesterday I was only on 4 or 5 hours of sleep, and that 100% had an impact on my performance. I didn't talk about it much yesterday because it does sound like a bad excuse, but that's how trading is. If you lack sleep or if there's something happening in your personal life, that's going to impact your performance 100%, right? Because trading is just psychology. So if you're lacking sleep, your brain is probably not going to perform to the best of its ability. Got it. Super explained. Thank you. Thank you very much. Anyone's noticed analysis is gold? Yes, this analysis to me is the truth of the game because you can't deny price action. It's undeniable. And you can use different things like fibs, which are great. You can use FEGs, like which are great, but they are confluence to the market structure. And even now, if you shorted 6680 through 6692 and you managed your risk into the next structure, which would be the Monday low slash, there's another low here. There's Monday's lows right here and Wednesday's low, right? If you didn't manage your risk here, that would be a mistake, in my opinion. Purely based on the zone to zone risk management. I swear the chart has been displaying some nice structures that need studying since the beginning of October. I agree 100%. You nailed it. since the beginning of October, price action has been showcasing some extremely fantastic learning opportunities purely based on how do you adapt to a changing market environment. That is so important as a professional trader. If you don't adapt, you're going to die. You have to adapt and you have to survive. Market changes all the time. If you don't understand how to adapt, then you're going to get blown out the water. It's just that simple, right? Hard to be a mentor, but I must feel a lot of pressure. We're rooting for you. Yes, thank you so much for the support. And I was just trying to make a point where when it comes to your human psychology, right? These things are not talked about enough, but they are extremely important, right? And your P&L is always directly impacted by it. Alrighty, so nice bounce from buyers today. And if you go to the analysis, don't forget about this section that I have in the Substack. Let me find it. This section right here, important supports plus range limitations, important resistance plus range limitations. This is very, very, very important. I do believe this is for yesterday, right? Let me see the dates here at the top. Yeah, this is yesterday's Substack. Let's get today's, which is right here. So don't forget, everything that I write about in this Substack is important. Important support 66.53 through 66.61. This zone marks Wednesday's low and Monday's low and is the most aggressive support on the chart. Bulls hold it, we go into resistance direct, right? And that's exactly what they're doing right now. Anybody that wanted to short the zone a little bit higher, 66.92.75 is active. And what I would do here in this situation is I would just be a little bit patient. The market is flipping extremely green at this point. And obviously volatility from overnight or volume from overnight is bleeding into RTH. So what I would do right now is I would look for a false breakout of the structure that we have here. I think the predetermined short already played out for anybody that shorted 66.80 zone to zone. And now we have to wait and see if there's a false breakout here. Remember, the first test of these zones are always the best predetermined entry models. And the first test of the zone happened at 9:45 a.m., right? Zone to zone risk management. Anybody that wants to short again in this zone, 66.80 through 66.93, you have to watch for a false breakout, in my opinion. So that's exactly what we're going to do. Do not get run over. The watch list is looking fairly healthy. Let me go ahead and type that in the chat here. That one little principle that the reaction on the first test is always the best reaction can save you a lot of cash. And I learned that lesson the hard way. And you need to be able to manage your emotions too. But that being said, let's see if we can get a false breakout here. What we want to see is price action go back below 66.80, and then we can look for the false breakout. Yeah, the scariest though is usually going to give you the best opportunity, right? It's usually going to give you the best. The first reaction is usually just the best. And now everything gets tricky. Draw your expectation, yes. So essentially what we want to see is we want to see price action go back to 66.80. And if price action goes back to 66.80 or even a little bit above 66.82-ish, then you can look to apply the market in false breakout entry model. And then you have a very defined spot to place your stop loss, which would be at the high of the day or a little bit higher here, right? If you're waiting for the Fibonacci trap, what you would want to see is something like this, retrace back into it, and then go lower. So that's how the false breakout entry model looks like. You have two options: trade the Fibonacci trap false breakout, or just market in short. As soon as you get enough criteria that sellers are active, right? So for the Fibonacci trap, what you'd want to do is, first of all, let's see how low this candle goes. What you'd want to see though is support get tested. So let's just say we go to 66.71 and then we bounce off of 60.71, 66.71 back to 66.80. Then you'll have your short order waiting here off the 0.382 or the 50%, and then your stop loss is behind the highs. Right? So anybody that wants to short the false breakout now, it does look decent. Does look decent. I would honestly still wait for the Fibonacci trap, but if you want to be aggressive, it looks decent. Remember the premise for today. The premise for today is it's going to be the most difficult session of the week. So just keep today with a grain of salt. Yeah, price goes level to level. Yeah, it just plays ping pong. That's all it does. It's a machine for liquidity. How do you feel shorting previous all-time highs or retest of all-time highs already considered expansion for you? That's a good question. It comes down to our expectations for the day. What's the range parameters? If we're stuck in a defined range and there's not enough volatility or volume or external reason for the market to push outside of that predetermined range, then what we have to do is we have to fade the edges. Doesn't matter if they're previous old highs or if they're used levels or not. If price action is going to remain range bound, then we have to fade that range. So you can go into the nitty gritties of it. So for example, we knew that 66.80 through 66.92.75 is a must hold zone for sellers to showcase strength. So you can use that analysis to your perspective, but you're also using range parameters too, because the overnight bounce is already 100 and something points, right? So that's huge. That's a 2% move into the zone. If buyers are exhausting the range potential here, and if buyers are simply exhausting their buying power, right? Because then you'd have to be expecting a 200-point bounce to the highs, which would be kind of crazy, right? So you're using all of these things as an edge to apply the entry models, right? So let's see if 66.80, let's see if we can get below it here, and then you guys can mark it in. Or if you guys want more confirmation, and especially if you guys are new, that's what I would recommend is wait for more confirmation, wait for the Fibonacci trap. Wait for the Fibonacci trap and we will see. The overnight highs today, the pre-market highs right here. So 66.71 and 66.73. That's going to be an interesting spot of very tiny resist or support. And we'll see if sellers can get below it. Fib trap would be nice for potential continuation of last Friday. Yes, that would be phenomenal. And we know that this zone is essentially a must hold if sellers want to do that, right? Draw the lines one by one. I will say that there's a certain finesse to drawing these structures, and some traders have, a few point discrepancies. So when you're drawing your own levels, you're also connected to the chart. It's like you're practicing, right? It's like you're shooting your free throws. And when you're drawing these lines manually, it gives you a very good perspective of what's happening. Versus if an indicator draws your lines, you're not really connected to the chart much, right? You're not doing that nitty gritty work that makes you very confident what you do. I don't use the Fib indicator because it would just be way too much on my chart. I wouldn't even be able to see price action at that point. So that's something definitely to keep in your mind too. If you have too many lines or you have too many indicators, you have too many FEGs, you have too many EMAs, SMAs, VWAPs, it could be way too noisy on your chart. So just keep it simple, right? Find what works for you, find your niche, and just focus on it. Because at the end of the day, any system is profitable if it's aligning with the market structures and the market context, right? Doesn't matter if it's an FEG, doesn't matter if it's a fib, doesn't matter if it's the horizontal lines, even VWAPs and EMAs and SMAs. All of these things are just aligning with the chart, right? And if you trade the chart, which is why I always separate my analysis into internal and contextual context. If you're trading the chart, you're already doing better than 90% of the rest of retail traders. Because the 90% of retail traders are not trading the chart. They're trading what they think, their opinion. Oh, I think the market is weak. Oh, I think the market is strong. No. The chart will tell you if it's strong. The chart will tell you if it's weak. And the chart will tell you if it's neutral. And then it's our job to get in on the winning side, right? And to get the best risk to reward, sometimes you have to forecast who's going to get trapped. And that's what we did on Wednesday, right? That's what we did on Wednesday. And that's why we caught the best trade of the week, maybe the best trade of the month, maybe the best trade of the year if we continue flushing down because we forecasted who got trapped, right? But at the end of the day, it was resistance on first test. So it makes sense. Fifth and price action is where it's at. Yes, price action will always be king. Price action will always be king. No denying our beautiful price action. No denying it. All right, let's see here. All right. Institutions drawing lines. So institutions, they are just next level, right? Institutions are the highest of the highest. What institutions do is that they have algorithms, they have robots, they have proprietary systems that we will never understand unless you work for that institution. So institutions are not next level, right? And also institutions, they have elite, the best professional traders in the world. They give them a salary to trade the institution's capital. So I'll tell you a story. The original prop firm idea back in the day, right? In the I don't remember the specific dates, but it was before to the 2000s. So back in the day, the original premise behind a prop firm was that an institution was going to trade people that are quality and good enough to one day develop into professional traders. They were going to pay them a salary on top of giving them the institution's capital to learn how to trade. And the institution's goal would be one day the person that I'm investing in is going to become elite enough to trade the institution's capital. Nowadays, they just have algorithms and robots, but it's still the same idea. But unfortunately, in our day and age, people have skewed what a true prop firm is and they use it to their advantage, right? And they try to manipulate people. Yeah, I'm a prop firm. I'm a prop firm. You're not a prop firm. You're not a bank, right? You're not the bank. You're not JP Morgan. I'm sorry, but you're just not, right? And then they put these rules behind their tests. And think about it like this. If you're a real institution, if you're a bank, if you're a massive company like JPM, right? Why would you put rules against the people that you're trying to develop into professional traders? The only rules that they have to follow are the rules of the chart so they can learn how to trade and one day trade your millions and millions. So that's my whole perspective on prop firms, and that's why Rich and I don't really deal too much with it. And to be completely honest with you guys, we've been reached out to all of the prop firms under the sun, and we could have been with them. We could have been making a ton of money selling people these prop firms. But that's not what we believe in. We believe in trading our own capital, and we believe in just trying to do the right thing, which is showcasing our journey, all the ups, all the downs, everything, right? And we don't want to take advantage of anybody. Your capital is king. What you have in your bank account is king. That's it. That's what you have. Try not to lose it and try to increase it, right? But anyways, back to the chart. We have not closed below 6680. We're rejecting it. There's no Fibonacci trap right now either. So that's why I said earlier, the first test already played out. This zone is going to be a little bit tricky. So let's get some more confirmation that sellers are active. Perfect combination, doing what you love and get paid. Exactly. Yes, exactly. Exactly. You have to essentially be handpicked by those institutions, at least based on what I've read. Obviously, the stories I've read don't have to be completely certain, but those are the stories I've read when I was doing my own personal research on prop firms. And at the end of the day, if you don't have enough capital to meet the margin requirements for your broker to trade futures, and if you don't want to do options, I mean, do what you got to do at the end of the day, right? To get your feet wet. We're not completely shunning prop firms, but do what you got to do, right? And at the end of the day, your capital is king. Cash is king, right? Your cash is king. I don't think anybody can argue against that fact. For me, I'm fairly young, but I've always had a decent amount of capital saved up. And throughout the past 4 years, I've obviously saved. And I trade that capital. I, I, I don't mind risking it. I'm not fearful of losing it. It is what it is. If I want to learn how to be a trader, I got to risk my capital. I have to. So I can feel all of the emotions of what I'm doing and try to just be better. All right, you'd want to see a little bit of increase in volume here, and you'd want to see price action get below 6680, holding above 6680. Keep in mind the prior day close is right here as well as 6670. So that can act as some mini support. Just depends on how strong buyers are right now. But let's see what happens to this new 15-minute candlestick. The first hour of the day has concluded. So let's take a look at the first hour range. 9:30 a.m. to 10:30 a.m. is a 55-point first hour range. And this first hour range is incredibly significant because the breakout of the first hour range can make the chart a little bit more bullish. And that's just because of where the first hour high is. The breakdown of the first hour low can lead to a little bit of a bearish signal. But obviously, they'd have to break down 6611 as well and hold price below the prior day's low. So the first hour range today means a lot. And anybody that wants to trade the false breakout of 6680 through 6692, I do feel like it looks fairly decent now. We spent 5, 10, 15. We spent about 20 minutes in this zone. It looks like sellers are definitely active. So anybody that wants to market in short right now with the stop loss behind the high, this is a decent trade, right? And if you get stopped out, there's resistances above, but make sure you're not revenge trading and make sure you're not over trading on a Friday, right? So if you guys want to take the short fill now, it does look fairly decent because we spent so much time here, right? Spent so much time here. If buyers were truly strong, we should have broken out the highs and we should have been contesting higher by now. But that being said, obviously place your stop loss. No guarantee. Every single day in the team meetings after hours, we talk about you have to be willing to lose whatever you put into the trade. And if you're not willing to lose what you put into the trade, then you shouldn't be taking the trade. Other than that, I'm going to be heading out soon here. And for those of us that are waiting for more confirmation, the Fibonacci trap is fairly obvious. I like the 6642 to break, then enter short. 6642, where is that? 6642 is right there. Yeah, so if the low of day breaks, that would definitely be a bearish signal. But I think if you want to get good risk to reward, you have to forecast trapped buyers. So shorting at resistance And then let's say the market continues lower, break down here, you're going to get some phenomenal risk to reward. But either way, manage your risk zone to zone. I feel like based on my findings, managing your risk zone to zone makes sense. And then you can manipulate your entry here based on your stop loss and your target. So let's say my target is fixed, right? My target is fixed here. It has to be 66.62. In order to get 1R, my entry needs to be slightly higher, right there, 66.80, 175. Right? And then your 1R gets hit at 66.62. And then we can read the real-time situation to see if we need to extend the target or not. But that being said, shorting 66.80 with the false breakout, it looks great. And unfortunately, I forgot to send it in the SPY VIP because we were talking here. So let me just copy and paste here. Fantastic. Yeah, fantastic, fantastic. This week has been, outside of yesterday, this week has been fantastic, fantastic. And just to motivate you guys a little bit, I think my mentor is walking away this week with about 20R. But he's using puts, he's using the NASDAQ, and he's using ES. So three instruments. When you guys get to that point, 10, 15, 20 years down the line, or 5 years down the line, when you guys are extremely comfortable, you can look to increase. I see that message. You'll be looking to increase your position sizing sometimes if you have high conviction setups. So I'll give you an example. Wednesday was a extremely high conviction setup. You can short ES, you can short the NASDAQ, and you can buy puts up here and walk away with 15R at the end of the day, and you can literally retire for the year, honestly, right? Which is nuts. But yeah, that's just some bonus tidbits that I wanted to talk about. Can you say something about risk management at puts? So we talked about this a little bit with a member yesterday. I had a one-on-one session with a phenomenal member. Let's see if he's in here. No, I don't see him. But anyways, what we talked about yesterday is that if you have high conviction at a specific area, you can look to buy puts or buy calls. And puts are usually better than calls when it comes to a pure risk reward return because we know that sellers always take the elevator trip down the range. So if buyers are trapped and you have puts at the highs, you're going to get an insane return, 500 to 1,000%. That's what happened on Wednesday. So buying puts in specific situations when volatility is high and you have a high conviction setup, like on Wednesday or even Tuesday too, or excuse me, Thursday, those options are going to be nuts. And Tuesday, if you wanted to get calls down here at the gap fill, that was nuts too. But remember the parameters. We're looking to fade the edge. So the fact that we're fading the edge, you're going to be doing the opposite of the sentiments and you're going to get some good deals on those option contracts. $66.80 downside. Yeah, $66.80. Yeah, that was a great zone for today. Fairly simple stuff. Anybody that shorted 66.80 off of the false breakout, look to manage your risk here. It's at least a 20-point move into the next zone. And let's talk about what can happen next here. So the first hour range is incredibly significant. Manage your risk into the zone below, which is 66.61 through 66.53 through 66.61. So as soon as we tag 66.61 here, or even right now, you can look to scale something out. But if your lean today is bearish, although the chart is neutral, you can look to extend your targets. So what do I mean by that? Instead of looking for the first hour low as your next target, maybe you can extend it into the prior day's low or 66.11, the FOMC low, right? You can see the difference in risk reward here. Let's say your next target is at the VWAP or the first hour low. We go from 2R, all of a sudden you 3.5R. And these extended targets, if you have the finesse to do it, sometimes it will backfire and it is what it is. But if you get that hitter, it's going to pay you tremendously. And you know that if you get a 4 to 5 hour trade, you can lose 5 times in a row and you'll be break even. And we're probably not going to lose 5 times in a row. Knock on wood. Right? So that's the power of risk to reward. That's why risk to reward is so important. Right? That being said, no argument if you take another target at the first hour low. Definitely I wouldn't argue with you. But Wednesday was a different situation. I definitely would argue with you if you didn't extend your targets on Wednesday. Wednesday was a completely different scenario. Alrighty, folks. Anybody that shorted the 6680 through 6692 zone, you should be happy. You should be scaling something out by now. 25 through 50%. You don't have to scale out more than 50%, but 25 through 50% is good enough at first targets. And then remember what our book said, right? Remember what our book said. If a trade is working for you, then you want to be hopeful. That's why we talked about extending the targets. When a trade is working for you, you don't want to be fearful that your trade is going to go against you and that the market is going to take your profits. No, when you're on the right side of the chart, you want to push your advantage and you want to get good risk reward. That's why I said at the first target, which would be zone to zone, you don't want to realize your entire position. You don't want to scale out more than 50% because you want to be hopeful that the chart is going to continue lower, right? If you sold the high of the day, of course you want the chart to go lower, right? Let's be hopeful instead of being fearful and taking off your position here or scaling out too much, right? All right, so there's that target hit. Anybody that wanted it, good stuff. Good stuff. Great live stream. I'll be posting this live stream on the YouTube, I think, because it's super jam packed with education. And obviously, this recording will be posted in the weekend reports. The weekend reports. Anybody that wanted to trade the Fibonacci trap, you can hunt it. But just remember, when volatility is high, when volume is high, sometimes you're just not going to get the Fibonacci trap, right? And relative volume is definitely high today, just because of what happened overnight. Claypole, Autism Dad, Ada, Angela, LJ, Metal, Brian, and who else is in here? Thank you guys so much for tuning in, and everybody else that tuned in, anybody else that's lurking. I will see you next time. And don't overtrade, right? If you shorted the highs today, that's it. One and done. One and done. Head out to the weekend. Smell the roses. That's what my mentor says. Smell the damn roses. Sometimes we forget to smell the roses. And what I mean by smelling the roses is be positive, be grateful. This is a fantastic thing that we're doing here in this Discord. And we got to smell the roses, right? We got to smell the roses. As always, no scammers should be getting paid. Please do not get scammed. We have no crypto, no copy trade program. They scam because they cannot do what we do and they have to succumb to the evil in the world, right? Because they cannot do good with themselves and they have to take advantage of other people. So protect yourself, be safe. It's a very online world nowadays. So crime takes place online more than it takes place in the real world nowadays. So make sure you're safe and protected. You can only inquire with us directly in the Trading Wars Discord. You can email us, dairy@tradingwars.com, rich@tradingwars.com, or when in doubt, just head over to the website or even the Substack is great as well. Zone to zone risk management here, guys. Zone to zone risk management, and be hopeful, extend your target or trade for the first hour low, trade for the VWAP for your next target. We'll see if it gets hit. Thank you guys so much for listening. If you need a one on one, reach out to rich@tradingwars.com, and I will see you later today for the 4 p.m. after hours team meeting. Please tune in if you can, and if you can't, the recording will be posted on the YouTube. Enjoy the rest of your day. Smell the roses this weekend, and I will see you back later.